my friends. Hello, my friends. My friends. What a weird market. Keeps getting weirder. Just got to fight through it. You're on the front lines with me. We're getting shelled. And all you can do is fight. That's really it. I always get this weird feeling when I start these podcasts of like, did I forget? Was there something I was just supposed to do that I'm forgetting? It's the curse of a loan officer's mind. All right, let's dive into it. We got a bunch of stuff to get through here. I'm going to make it relatively quick today. We'll look at a few things. We'll do some charting. We're going to look at a couple of different things in the mortgage marketplace. We're going to look at the real estate marketplace. We're going to do things a little bit differently today than normal. A lot more articles, concepts, and just what in the heck is going on. So what happened? All right. Last week, we just had this bloodbath, right? I mean, let's just get this part over with. Mortgage rates. We finally saw a green candle today. This is a huge blessing. Whoa. You all saw that. Okay. As my witnesses, people who are around me enough know that I have I don't even want to call it bad luck anymore because there's something more to it. This is a perfect example. Name me anyone else that you know who tries to open a window and look at this. Look at what's going on. So crazy. So anyway, we had kind of a bad week last week, right? We had a bad inflation number right here, and that really gave us an ugly chart to look at. That is an ugly formation. We broke the support that had been holding. Some people were telling me, hey, what are you talking about, man? This is definitely a downtrend. Look at the highs. But a lot of times, guys, when you see this kind of consolidation, it typically means we're actually going higher. Now, this even could be the case here, where we see this type of lower. I call it a death march lower. Death march lower usually means you're going higher. It fakes out people who are selling and thinking they're doing the right thing, and then we blast off. And this could still be what's happening. We're about to re-enter the channel, so that's actually a decent sign. Up how much? 49 basis points today. So a game changer today. Now I'm going to show you what interest rates are today. It's not going to feel like a game changer. It's not going to feel like anything great is going on, but it's definitely better than it was yesterday. Okay. Now I do these 780 credit, detached. Okay. So if you have a condo or if you have lower credit scores, your rates might be a little higher than these, but there's no points and no lender fees factored into this. So something to keep in mind. Back down to the high sixes. This is important because when we look at, there's actually a story I'm going to do today about how the average rate got above 7.5% again last week. And that's what people are hearing. So we got to keep that in mind. What are people hearing? That determines a lot about what people do. Sentiment is important. So when we look at this formation, initially you look at it and you go, well, it's bearish. We got lower highs. We got some lower lows here. We've got broken support that we're sitting at for a while. But we dipped down into this breaker right here, which is a crucial breaker. This was our original breakout breaker. And we've bounced off of that again. Now, if we go and we reclaim this channel and, bounce around in here, that would lead us higher. That would totally make sense. Totally makes sense. Hey, we got a downward channel. It's very obvious. We're going to liquidate everyone who's playing the channel right into support and then take it up. Could totally happen that way. Could totally make sense. But we've got other financial markets melting as well. Why? Why is everything melting? Well, the reason why everything is melting is because the market had expectations of Fed rate cuts soon. And we're talking June. We get bad inflation report after bad inflation report, and then you have the Fed saying things like, we may be too early with this rate cut talk. We've still got more of a fight against inflation before we cut rates. That's what's putting a pause on things. That is where we got the no-go starting last week. And it has bled into this week, and the sentiment has continued to be terrible, and it's been sell, 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 sell. Everything. Cryptocurrencies, murdered. Stocks, murdered. Bunch of stuff, just red. So this expectation needs to be reset. And all that really means is it's a short-term blip. If we're expecting rates to be cut, which they probably will, it's just a matter of when, right? Maybe now we're talking late this year or early next year. So they're saying here, expectation sees the risk in March 2025. Great. Let's put that as the expectation. And let's see where this market really stands. I think it's good. Let's see where the market really stands. Let's clear out the fluff. Where are we really? If we're expecting rates to be cut, wherever we settle, it'd be a great time to buy, a great opportunity to buy. And I'll tell you where my bids are on Tesla here in just a minute. Within a few days, the Bitcoin halving is going to take place, which is the programmed deflation that takes place at Bitcoin. It is programmed to deflate, which is good. Remember, inflation bad, deflation good. Deflation means your stuff becomes worth more. Inflation means your stuff becomes worth less. Well, not your stuff, but your money becomes worth less. So, the program deflation stuff is taking place within a few days here. What this means is that the miners will get half of their reward for mining the Bitcoins on the network and keeping the network stable. It seems like kind of a bad rap for the miners, but the concept behind it is this program deflation means that there's less and less supply, which means the price should continue to go higher. However, let's just get Bitcoin out of the way. With regard to that, typically we don't see a new all-time high on these 4-year cycles that Bitcoin is in until after the halving. So it's not until after the halving takes place that we see a sell-off and then a new all-time high. Things are happening differently this cycle. We already saw the new all-time high. It's not inflation adjusted though, but we got a new all-time high. And then now we're seeing the selling, which appears to be preeminent to the halving. Now we have a very interesting candle close taking place here in the next hour and 12 minutes on Bitcoin. I'm going to show you why I drew that blue horizontal line there, right where price is right at this moment, and why that's so important. But essentially, this has been playing out very, very technically. If you are watching Bitcoin, I do not hedge my Bitcoin investments at all, although I wish I had, because I've called these moves down perfectly. We have this order block here, which I've extended out this yellow region. You can see every time price got into that, it rejected pretty quickly. And that just shows you that, okay, buyers are sort of done. Sellers are taking over here. We had a couple of false flags. We call this bull traps, bull crap, bull trap, whatever you want to call it. So, when we got this higher high right here, it kind of looked like, okay, we got higher lows, higher highs, even though we had this lower high here. That's kind of negated now, and we can still go higher. No, that was a trap. That was a setup. And then once we closed on Saturday right here below this breaker, now we know we could see that rejected immediately as well. As soon as it touched that, boom, wicked up through it and then straight down. So why do I have this blue line traced right here? Well, that's what are my targets? I'll tell you what my targets. I think we're going to see 59,000. So we're going to see $59,000 Bitcoin. That's the best case scenario, is that will be the low. It'll come down and take out the low right here inside of this bullish fair value gap. It'll just take it out, sweep all that liquidity, and then we can go higher. That's the best case scenario. Worst case scenario, I think we're going to go and we're going to see 53,000 right here. We're going to come back down to this bullish fair value gap here. This former resistance right here, this little shelf is built right nicely on this bullish fair value gap. If we see 53K, that'll be a great time to buy. Okay, in my opinion. And I would actually buy more I have no intention of buying more, but if we get to 53K, I actually will. I'm not going to at 59, but at 53, I will. I feel like that would be a very, very clear and obvious technical bottom for Bitcoin. Why do I have this blue line drawn right here, you ask? Well, it's the 50% of this wick. So this wick right here led us to the all-time high. This was the low, the cycle low that led us to the all-time cycle high. This wick was also built on a bullish fair value gap. You can see that here. It went into that. So I took 50% of the length of this wick, and that's what this line is right here. Notice we bounced off of it here. We've bounced off of it here. And today, even though we dug into it, look at today, right now, it's trying to close above that. That would be bullish. We don't have to go to 59K. We don't have to. We went into the 59s today for a brief moment. We got down to 59.6. So we don't have to go all the way down to 59. We could be done. And if we close above that and then we move higher, that very well could be the case. So I'm watching that very carefully for all my Bitcoin buddies out there. There's definitely, this is an interesting time. I have to sit on my hands until January. That's my trading plan. I'm not touching it until then, at least. unless we hit 400,000 in the meantime. Okay, enough for Bitcoin. Let's actually talk Tesla for just a second. I know I have a lot of Tesla buddies out there too. Tesla's getting murked. Is reporting earnings on Tuesday. It's probably not going to be pretty. Probably not going to be pretty. They said they're going to lay off 10% of the global workforce. That's a lot. I'm still expecting this standard deviation to come to complete fruition, which means we're going to see price probably somewhere in the high 120s. I put my bids at 131. So I have bids in at 131 for Tesla to essentially back up the truck. And we'll see. We'll see if that ends up working out for me or not. But I've got bids in for Tesla at 131. I think that's a safe place to go. I do expect us to get there unless Tuesday Tesla reports something or has something going on with their earnings call unforeseen. And we've been talking about unveiling the robo-taxi, which is going to be the self-driving taxis. It's a huge game changer for multiple industry scenarios. Imagine if Uber didn't have to hire Uber drivers. Imagine if they just bought Teslas and the Teslas just came and picked you up and took you wherever you wanted to go. Eventually, notice this, in our lifetime, that is how driving is going to become. You guys realize that, right? In our lives, the way it will work, no one will get or have a driver's license. You will buy a car that drives itself. The car will pick you up, take you where you want to go, drop you off. You won't have to pay attention to the road. You can do stuff. You can look at your phone. You can work. That's coming. We're going to see that in our life. Tesla is on the forefront of that. Also, the best AI on the planet. I don't care what anyone else is saying about any of this other AI. Tesla AI is the best. The robotics are the best. The Tesla robot is the best. That's why I'm so convicted on this one. I'm convicted on this one like I'm convicted on Bitcoin. I'll be with it to the end if it comes. So 131 is what I'm looking at for that one. Okay. We got so much random stuff to talk about today. We are live. We are live on the Book of Faces. We're live on LinkedIn, YouTube, X. If you want to say what's up, feel free to do so. We've all been losing our booties lately, but it is what it is. Maybe we'll have a really nice day. Hey, let me give you one holiday again. Just for a green day in the mortgage bond market, I'll take it. Should you refinance your mortgage? 3 signs at a time. Real estate experts say, shut your mouth. These people don't know what they're talking about. Listen, first of all, is it a good time to refinance? No, it's not. It's not. Is there situations where you could make sense of a refinance or where maybe you have to refinance? Hey, I'm getting divorced. I need to buy out my spouse. I just had some people contact me today, past clients. Hey, we want to get a HELOC. We need to buy out our partner. This and that. These things happen, but it's not a good time to refinance. Now, maybe if you bought and you had a really low credit score, now you have a really high credit score, then maybe rates could be lower for you, but probably not. So it's just not a good time. Look, I'll tell you when it's a good time to refi. I will show you rates. I will tell you exactly what to do. I have a video, by the way, you know what, which I will pull up. If you haven't seen my Trifecta video, you have to check it out. I haven't seen any lenders copying it yet, but there's no doubt about the fact that they will be. Essentially, it's my system for refinancing myself, and I'm now sharing it with everyone. I didn't for a long time because it's just kind of complicated, but at this point in time, so this is the video, smarter way to refinance. I'll put that link as well down below, but basically smarter way to refinance, the trifecta strategy. How do you have a lower rate, a lower payment, and a lower loan balance at the end of your refinance? There is a way, and I can show you how. So don't listen to any of these people. Listen, when you start seeing, people are like, well, when's the right time to refi? How do I know? What's the trigger? When you start seeing places like CNBC, you start hearing it on the news, on the radio, hey, rates just hit new all-time lows, or this is the lowest rates we've seen in 8 years or 18 years or whatever. When you start hearing that, it's at least a year from then before we hit the lows. I know I'm a mortgage guy. I get paid to do loans. I should be telling you to refinance every time you can save $1. But bottom line is it's a waste of money if you're going to refinance 2, 3, 4 times in a cycle. Typically, you're better off waiting. A lot of cases, you're better off just waiting for a little while, let rates come down a little bit more. Make 1 or 2 or 3 more payments on the old loan. It's okay. Refinance later, save more. So there's lots of ways that we could do that too, as far as hedging with locks, if you're worried about it. And I can explain that to you if you have questions about it. Buyers of newly built homes can face a property tax surprise. Oh, That's not all, Alex. They can face all kinds of surprises. Listen, buying newly built homes is a huge risk. We have friends right now. Oh my gosh, the hell they're going through. House was built terribly. They're in multiple people in their neighborhood are dealing with it. Lawsuits, stuff wasn't working, plumbing broke, floods everywhere. Oh my gosh. Brand new house. A brand new house. Most of these big builders stink. So you have to, I think if you're going to buy a newly built home, it's best to buy it from like a local, smaller custom builder, as opposed to one of these massive, companies. Just so many things slip through the cracks. It's really, really, really bad sometimes. Just be careful. I also have a video on this, 8 things you need to know before you buy a newly built home. I'll put that link in the description on the YouTube channel as well. Just be careful. What they're talking about here is taxes. Like a lot of people don't know, oh, there's taxes that were coming due. I mean, yeah, you got to look at when you're buying a new build, you got to look out for HOAs, Mellarus, tax rates, proposals. A lot of times they say, oh, the HOA is going to be this much, but it'll go down. No, it will not. HOAs don't go down. They go up. So please don't buy that crapola. All right. This was something I posted earlier this week. We know what's going on with the NAR settlement. Buyers are going to have to pay their own commissions, or whatever. That's what everyone thinks. Not really. Remember, and the settlement's not approved. Nothing's finalized. But if it were approved, all it means is that the seller can't advertise that they will pay the buyer's agent commissions. They can still do it. And I think they still will. But what this is Fannie Mae coming in and saying, hey, listen, based on what's going on with Burnett, Morrill, et al. Cases, all this stuff, realtors, NAR, et cetera, what we're going to say is this. If a seller credits the buyer to pay for the buyer's agent commissions, we're not going to count that as an interested party contribution, an IPC. Every single loan scenario has a maximum amount of credits that can be given to the buyers by an interested party. Agents, lender credits, seller credits, they can only get so much. Okay. Like for a VA loan, for example, it's 4%. For a conventional loan, sometimes you put up money down, it can be 6%. It changes. It's different. I have a whole thing that I posted on my Facebook that explains the different breakdowns for the different loan types. You won't have to count this towards that. So someone could get seller credits to pay for their agent commission and pay for their closing costs. So that is something that was huge. And even though people are like, well, sellers can still advertise that they're going to pay for, a buyer's agent closing costs. Yeah. I think some sellers are going to say, no, we don't want to anymore. We saw the news and we don't want to put it that way. But then they realize once they get into the market that, yeah, okay, we're not really finding any buyers who are willing to do that. So maybe we will offer a credit now, or maybe we can just negotiate that in. So it's good news. It's good news because it helps maintain the concept and the possibility of really a status quo. And I think that's good. Here is something that's really interesting. This guy keeps asking me to subscribe. Chill, bro. The central problem, too many bad agents. Now, describe bad. But basically, this guy who has a pretty, I don't want to say notorious, but he has a pretty popular blog. He said, fiduciary duty requires financial stability. And that's an interesting thought because we haven't really thought about that much. We haven't really brought that up. This is not something that's really being discussed, but there is not a financially stable scenario for people who are commission only. But yet we're requiring a fiduciary duty, and there may be a conflict of interest. I just thought this was an interesting read, especially for my friends in the industry. Check this out. Just read this blog. It really makes a lot of sense. There's a lot of things that should probably be rethought. If we're going to rethink things, then we should probably, take a look at that. Okay. Housing starts down 14%. This was one of those articles that I think, it got picked up by some news outlets. And so I wanted to actually talk about the real article because the headline is housing starts down 14.7%. And people see that as a bad sign. Remember, housing starts are the start of new homes being built. And so if we see less new homes being built or being started, what does that mean? That means less inventory. Less inventory. That's bullish for real estate, not bearish. Bearish would be, hey, we have 20% increase in housing starts. Whoa, Nelly. They're building too much. It's too much inventory. We don't need all that. Well, actually, we do need all that, but not if you're hoping that prices go higher. If you want, hope, or wish that home values will go up, then this is exactly what you want to see. If you're a home buyer sitting on the sidelines waiting for lower rates and lower prices, you're going to get lower rates. Lower prices, best of luck to you. Good luck to you, my friend. Okay? All right. This one, I just threw this in here too for the description and the YouTube channel. The builder sentiment during that same period was unchanged. So if you look at that same period where starts were less, is that just because the builders have already been as aggressive as they can be and they just couldn't get as much ground broken? Probably. I still think there's more new inventory coming. As long as it keeps getting gobbled up, they're going to keep building it. This is the same thing we talked about earlier. Powell dials back expectation on rate cuts. This one has a little bit more data that I think is good to read if you guys are reading these articles. That's a good one. This one was, hey, mortgage rates back to 7.5%. Just keep in mind when you see these things, okay, you're looking at average rates. I want to bring my rates up just for a second because when you're looking at broker rates, wholesale rates, going to be less than the average rate. And the average rates do include people paying points, but they also include people with lower credit scores and things like that. So if you look at like the rates I'm giving you here with a 780 credit score and a detached home, the average rates are also going to show condos, lower credit scores, people who've paid points to buy the rate down. It factors all of that in. So it's more of an all-encompassing number, but it's not necessarily accurate to what the rate would be for you or what's necessarily happening in the marketplace. So let's just keep that in mind when people are talking about interest rates. Let's see what else I got for you. Oh, let's look at the economic outlook, and then we'll look at the NASDAQ. I'm going to show you something you probably don't want to see, but it is what it is. Okay, so tomorrow we got jobless claims. Friday, there's nothing. There's no news. Expect lots of volatility on Friday. Lots. It's coming. Let's see here. Yeah, initial jobless claims tomorrow. We'll see whether there's some Fed presidents, existing home sales. So there's some stuff tomorrow. Should be pretty interesting. Here's something that's breaking. Freddie Mac wants to finance homeowners sitting on equity. Freddie Mac wants a new role financing homeowners sitting on equity. One banking group isn't happy. Housing giant could make $850 billion splash in the market for second liens. Ooh, that's juicy. That's juicy. So Fannie Mae, Freddie Mac, conventional loans. There is no second mortgage option in a conventional rate scenario. If you're looking at a conventional loan, same thing for the Ginnie stuff, FHA, VA. There's no second mortgages. If Freddie wants to get in to the second mortgage market, my guess is it would probably be HELOCs and seconds. It would probably be a very high lending standard. That's my guess. I don't think it would be like, hey, you can get a second with 640 credit. I think it's going to be like, hey, you need a 740 or something like that. So I don't anticipate Freddie necessarily going and saying, hey, everyone can get a second, like Oprah. But I do think if they could get into the market and have a product, that would really it'd be nice. It really would. I think it would help balance it out. I also think they're issuing bonds that would help keep those rates down. It'd create a benchmark for the marketplace. That'd be really good. I didn't see this. This is just boom. This just popped up. I just saw this bulletin and just clicked on this. I had no idea we'd be talking about this today, but I think that's pretty cool. All right, now let me show you the bad news. If you like the NASDAQ. All right, so here it is. So by now you probably know I use these standard deviation calculations to determine where price is headed. Now the last low that we had right here, all right, see this right there? Boom. So go back to the breaker to the low. Where does that take us? To -4. The -4 is complete fruition, okay? So -4, if you look over here, that's exactly where the market topped. The market topped exactly at -4, which means we've now come to fruition on the upside as far as prices going higher. Now we have a new breaker right here that was just broken. A couple days ago? Monday, the breaker was broken. It was not retested yesterday. I thought it would go up here and retest it today, which would be a great opportunity to sell. It didn't happen. So the selling pressure is so much that we didn't even retest the breaker. We just shot lower. Now, fruition is -4. That would be 15,200 on NASDAQ futures, which right now the NASDAQ's, right in the mid 17,000s. So it could be a 2,500 point shedding taking place in the NASDAQ. That's possible. But also -2 and -2.5 also can be the completion. So that's not total fruition, but that could be completion of the move. So we may only see, 16.6 or something like that, or 16,250. But we are now in a sell cycle. We are now in a sell program. And if you have investments in stocks and so forth, you're probably noticing that. It's brutal. It is brutal to be a part of that process. When you're especially if you have investments and you're just watching them go down every day. It's hard not to look at it every day. I know. I'm telling you, it's the best thing that you can do. It's possible. And it's tough. It's tough, but we're probably going to see lower prices over the course of the next, probably over the course of this quarter at least. If you look back at how long did it take for us to go to fruition on this one? Was October 26th until we got to March 8th. So what is that? 5 months ish, a little less than 5 months. That was to come all the way to -4. If you look at -2 or -2.5, we got there a lot faster, only a couple months. So maybe only a couple months we're going to be in the sell mode here. The reason why I bring this up is just to kind of be aware of it. If you have investments, if you're looking to, dollar cost average into investments, and just kind of expect right now we're probably going to see some lower prices here. That's around the corner. Now, if you add on to that geopolitical scenarios, if you add on to that bad inflation reports, this can create tension. Why is this important to my industry friends? Okay. It's very, very important that we understand the sentiment, where people are coming from. We already know that they'll win if they buy a home. Even if they don't buy it at the perfect time, in the long run, they'll win. We know that. But people don't see things the way we see it. They haven't been in the industry for years. They haven't watched people buy properties and then make gazillions of dollars. They haven't seen that. They haven't experienced it like we have. We have to know what kind of situation are they in. And what they're seeing is they're seeing their 401k go down every day. And that's probably going to be the case for the next couple months. They're seeing headlines about interest rates going up again. Lack of inventory. They find a house they like. They realize it's sold before they even get to go look at it. So we have situations that are very challenging for buyers. Just need to be accepting and understanding of that, and not just understanding, but also really truly grasping the reasons why. Why is this happening? Why are people hesitant? Why are buyers sort of not feeling it for the most part? But typically in these times, it is the buyers who pull the trigger that do end up winning. Where's my cha-ching? So nobody knows what's going to happen next, but I can tell you this: I'm ultra bullish long term on real estate. There's nothing that can change that. But the more I see about inventory troubles and builders not able to start as many new homes as they have in the past, recent past, when I see people who are very, very well qualified, and we're still pre-approving a lot of people, but just not very many people are buying homes. So we have lots of qualified people pushing timeline to the right, pushing timeline to the right, pushing timeline to the right. And the fact is, and the reality is, and there's no judgment here, but the fact is, the reality is, most buyers would rather buy a house $200,000 higher than today's prices for a 3% interest rate. That's just a reality. Like that's no judgment. That's just the way it is. And so we just have to embrace that. Look, we're not going to get a nice, steady, even sprinkle of buyers over time. There's going to be gluts in the marketplace, and there's going to be booms. And a lot of these pre-approved buyers are waiting for the boom time to get in. They just are. They're going to wait for that confirmation. They're going to wait until the market's bananas to try to enter again. and they'll end up paying a higher price, but they'll get a lower rate, and they'll think, hey, I did a great job. I waited till rates went down. It's okay. It's okay. Look, everybody gets the price they deserve. All right. That's just the way that everything works. Everything works that way. You're going to get the price you deserve. That's where you put your chips on the table. That's where you earn the price you get. Okay. Anything else we should look at here? No. Okay. I'm going to say that this is the end. This is the end. My only friend. Yeah. If you want a wholesale home loan rate, you know who to call. Look, I'll shoot you straight. Shoot you straight as an arrow, and I will hook you up like a tow truck. Whatever you need, let me know. I'll be here. You guys have a great night, and I'll see you soon.